Welcome to the Penny Lane podcast with Curly Gal Investor and Breakout Plays. This was a magical interview because Curly is actually Chris, Breakout Plays, mentee. So they have a fantastic relationship, and I was lucky to sort of get to be a fly on the wall and see how they interacted and really learned from each other. I hope you enjoy this episode. It is brought to you by Pennies Going in Raw. Please like and subscribe to the Penny Lane podcast. We are everywhere you get podcasts. We're also on YouTube. What you could do to help us the most would be to write us a review on Apple iTunes or subscribe to our channel on YouTube. Thank you guys so much for everything.
The stock market is hotter than ever right now, and traders are taking advantage. But what does that mean for the people who still haven't started trading? The market can be a little intimidating at first, but you don't have to be alone in the learning experience. We at the Pennies Going in Raw podcast are here to help you. I'm Dan, and with my co-host Hugh Henney, we make the stock market a fun but informative experience for our listeners. We offer knowledge for all levels of traders, from beginners to those who do it full time. On PGIR, we discuss up-to-date news about the stock market and interview other traders who all started out just like us and made it big. You'll hear from Hugh and other multi-millionaire traders, founders and CEOs of companies, FinTwit superstars, and even professional athletes. Have you ever thought about investing your hard-earned cash but don't know where to start? Do you have money just sitting in your savings account collecting dust? We were all there once too. Listen to Pennies Going in Raw on the iHeartRadio app, on Apple Podcast, or wherever you get your podcasts.
Hello, Curly and Chris. Welcome to the Penny Lane podcast.
Thank you so very much. I appreciate the invitation. That's wonderful. Wonderful to be here.
Thank you, Blaine. It's awesome to be here. Thank you very much for the invitation.
Of course, I'm thrilled to have you guys. This is going to be fun. So, I don't know you guys super well from Twitter or anything. Would you mind each of you just giving me a little backstory about how you got into trading?
Yeah, so for myself personally, I started in the market around 20 years ago, back in, I think it was around about 2002. That started off with me, investing in equity, for swing trades over a long period of time. So I long story short, I did that up until about 2007, 2008, before I transitioned into day trading. I was primarily trading equity up until that point, and then I switched to options just over a decade ago. So fast forward up until about 5 years ago, I started, helping traders online, and then opened the service up. And that's where I met Curly when she joined the service. I think it was back in last year. So I'm essentially a day trader of options and equity. I run a service called Breakout Plays, and Curly Girl is one of the members of the room. So that's basically a short bit about myself.
Fantastic. I love when we have options people on. I used to have, I've told this story so many times, I'm sure people are going to turn the podcast off, but back before I started trading options, I was supposed to have Shark Trader on the podcast, and my co-host Justin is our options person, and he bailed on me at the last minute, and I had a full-blown panic attack because I was like, I don't know anything about options, and then literally a panic attack, and then we ended up getting on the getting on the podcast and just talking about general trading philosophy. And it was my favorite episode. It was great. But now I can talk about options. I'm so excited to do it.
Right.
All right. So Curly, you got in Chris's room.
Yes.
Yeah.
Yes,
okay.
I initially started. Go ahead.
Well, I just wanted to know how long you'd been trading prior to getting in the room.
Okay. So I initially started fully looking into the market for the very first time a little before COVID hit. I was kind of looking a little bit, getting familiar, but it wasn't until that market crash in March 2020, when the pandemic hit here in the US, that I started looking really deeply and realized, give me a second. There's there's good opportunities going here. So I started investing as well. I started like just doing a lot of research about companies and thinking about the stuff that I used that I liked and what I was seeing for the future. And then I started creating a portfolio. So I started that way. I came across options in summer of 2020, I believe it was. And I remember doing my first contract. It was really difficult to kind of like understand, but it wasn't until I tried it that I was able to see how premiums moves and all that stuff. But I wasn't having a really big understanding of charts and candles and stuff like that, right? So
Uh-huh.
then in 2021, I did a little bit of that on 2020 here and there on mobile apps. And then on 2021, I really wanted to get more deeply into, understanding much more of technical analysis and whatnot. So I opened a Twitter page and I started kind of like documenting what I was doing. And, I was taking a lot of risk, I remember at that time,
Sure.
but I didn't really know much about risk management whatsoever, right? So I was like, trading big quantities of money, making big quantities of money, and then losing big quantities of money, right? So I came across with Chris over at Twitter. I remember I had a really big loss, and I was like, oh man, I was just like heartbroken, right?
Yep.
It was like I think it was like 2K or something. And I posted it on Twitter, and he had replied to my post and DM and gave me some tips and whatnot, and it was really helpful and encouraging to just have a conversation with another trader who's been doing this for a long time. So that's how I ended up checking out his room, and it was actually the very first time that I learned anything about risk management, because I really did not know nothing about that. And of course getting into learning more about um, technical analysis, charts, how to read a chart and things like that. So it's been a process, but it's definitely been it's rewarding seeing progress. I definitely will say that I still have a lot to go, but it's nice to be able to learn things, implement them, see what works for you, what doesn't, that type of thing.
Fantastic. I love when someone like finds a room in a group and just really fits in well. So I love that story.
Yes, yes, definitely. I had checked out some other place, but it didn't, for very briefly, before I have found breakout place, but didn't fit me well because I needed the educational component, the being able to know the why behind, why am I taking this trade, what's happening in the chart, that, you know what I mean, like that type of stuff. I wanted to know why. And I was able to find that when I found a breakout place, because it was very individualized. I was able to do kind of like one-on-ones and really going through screen shares and being able to know much more of what I was doing, why I was doing it, and how to better manage risk.
Fantastic. So, Chris, could you give us just like a sort of aerial view of your strategy?
So, obviously I'm primarily a day trader. I do swing trade from time to time, but obviously the market environment has got to be right for that sort of thing. But, I trade options, so I primarily trade weekly options, which, within the group, we send a list out on the weekend for, the plays we're looking for the following week. And then obviously as the days goes on through the week, we add more plays to that or potential setups. And my personal strategy is I like to day trade these options. I like to be in and out on cash overnight because the market is so unpredictable, especially now. I just like to be cash overnight, make my money, and then be sitting on cash through the night. So I primarily day trade options. But, go back to Curly and everyone else in the room. The beauty of it is, I mean, the plays we give in the room and via our email, they are viable for swing trading, day trading, whatever style of trader you are. So as long as the fundamental rules are respected and they're kept in your trading plan, it gives the person, the ability to adapt that to their trading style. So it's not one size fits all. It's just get an understanding of risk management. Stick to the rules that we lay out per your account and the size of your account. And obviously you can trade the plays as and when you like it, because we all take the same trades in our room, but we play them different, if that makes sense. So it's all down to the individual's trading style, which is a good thing because it's nice to see a group of people all getting profitable and making money off the same play using different trading styles. And that's what's so effective about the way we do it,
For sure. So you're all cash at night. I love that, especially in this market. Do you build a watch list, or are you sort of trading the same basket of stocks?
So on my permanent watch list, I have about 80 or 90 tickers that I trade all the time. And unless something catches my eye, on news or anything, I primarily trade the same 80 to 90 tickers every time, which is a pretty big watch list, but they're not all
pretty big watch list. Yeah.
Oh yeah, but they're not. It's like this week we've got, from those 80 or 90 basket of tickers, we've got 19 that we're watching through the week, and that'll change through the week, because some setups will become void, some will come more into effect. So we pick the best ones out via our list pre-market, pending catalyst, news, upgrades, whatever it may be, and how they do in pre-market, and then that gives our focus list for the day then. So it's a big basket of stocks, but I don't tend to deviate outside those stocks. They are my permanent watch list. And then it's a case of weaning that list down. So this week we have 19 tickers. Come tomorrow, which will be Monday, we'll weed out the best ones prior pre-market, and then we'll use as our focus list. So we could be left with 5 to focus on in the morning. And then obviously when the beauty of these plays are, if they don't trigger, we're obviously not in the trade. So any trade that triggers, we assess the market environment, the money flow, and how the technicals are doing, and then decide whether we're going to take a trade on it, And so to answer your question, Blynn, I've got a permanent watch list that I go through every weekend, go over the technicals, go over the flow, see which ones got patterns, which ones are going to be viable for plays for the following week, and then I send that out to the members. And then that's added daily in the room and throughout the week as they play out.
So you mentioned patterns. Are you looking more for patterns, or is it like are you looking for levels more, or patterns more, or something else completely? Or is it a combination?
It's a combination, absolutely. Because if we got, just for example, one of my favorite setups is, a reversal that's bouncing off support, which
perfect,
gives you powerful moves back up 9 times out of 10. So they are absolutely one of my favorites. So it's a combination of both. I want to see patterns, but it's got to be it in a specific area. And funny thing, we had a chat about this in the room this week. When a stock is at a certain area, it's got to be a meaningful area. It's got to be an area where buyers or sellers are going to do something. So these reversal plays are, for that reason, are one of my favorites. So it's a combination of patterns and a combination of where they are at the charts. The chart could be creating a pattern, but if it ain't at a specific level that's telling me something on the chart, it means nothing to me until a important level is either broke up to the upside or to the downside. So it's a combination, yeah.
Okay. And what do you have indicators on your chart? And if so, what are your favorite ones?
Well, I don't necessarily use indicators anymore. I used to use, like everyone else, the EMAs, the 9, the 30,
sure,
the 20, but I don't tend to use indicators anymore. And just for me personally, not that there's anything wrong with indicators, but because they're all lagging indicators, I mean, I've been staying at charts that long, the level 2, the candlesticks are a representation of the level 2 of the buying and selling. So if you understand the candlesticks, and charts on a pattern, because they will never change, because human emotion will always remain. So these patterns continue to repeat themselves. So the only indications are the indicators I use on a chart is anchored VWAPs and the volume itself. You know, I will look at things like relative strength or MACD or the RSI, or the CCI index. You know, I will glance at them from time to time, but I primarily just use the anchored VWAPs on my chart along with the volume shelf.
That sounds very simple and nice.
It is. I actually like that. Yeah.
Yeah, Curly, I'm sure that was refreshing, getting in the room and being like, I can take these off, or,
Yes.
yeah.
Oh, yes. Definitely, because it could, especially at the beginning, it could be really overwhelming. Seeing so much on a chart, or what everything means, what I need to pay attention to. And I that's definitely one of the things I appreciated, was the simplicity of it, and being able to understand and kind of like read price action, read what's happening, seeing what's happening with the candles, and a volume, and going through the process of trading that way. We definitely, I put on my chart anchored VWAP, just as a reference as well. Sometimes I might put on the MACD and the RSI Bollinger, but I'm more focused on what's happening with the candles and the volume. We got RTA, and then of some flow information as well, and I like seeing a lot how the premium is moving in relation to what's happening in the chart. That's what I think I watch the most, to see if the trade is for me or not, right? So, and that changes according to the market environment and a day-by-day basis. Sometimes I can notice that the premiums are moving the way that they usually are, based on, because I have a handful of tickers that I'm used to trade and that I know them pretty well. So when there's something off on the premiums, I notice quickly. And so I pay attention to that a lot.
Interesting. So which, do you have a certain contract that you specifically like buying, or are you're trying to find the specific contract?
So doing a contract or a ticker?
So I mean a contract, and I guess what I'm trying, since I'm because I am still struggling to understand that. So I 9 times out of 10 am buying just the at the money strike. Do you buy different ones? And if so, what are you looking at?
Okay. So I usually, when it comes to selecting a strike, I already know what's my trigger, right? So once my trade triggers, I also know what's the potential target that the trade could possibly go to. So I look at my options change, and I like to select a contract that has good volume. I try to get into the higher volume with a decent premium that stays within my trigger and my potential target point. I try not to go over the potential target. So usually I try to get close to what the potential target is and find a strike that has a good amount of volume. Does that make sense?
Yes.
Yeah, it's the same for me, Blaine. Once you got to trigger it, right? So what Curly is saying, if we got a stock that we are looking to get into the stock at, say, $100, and we know it's got potential to run that day to $110, we won't buy a strike further out than 110, because we know if that's the possibility, that's the highest that stock could go for that day, we're not even going to get in the money. So essentially, any strike from 100 up to 110 is fine, because it might be some people playing that ticker that can afford the contracts closer to the 110 strike, and some people who can actually afford to buy, at the money strikes or in the money strike. So it's up to the person, how much risk are you on your account? What's your risk for a trade? Do they want to get a few contracts further out, closer to the target area? And most of the time, you get a better return the closer to the target area than it will in the money if it gets there. So it's down to the person's risk tolerance and how much they're willing to risk on that trade. So there's multiple ways of playing that. Also, you could get at the money and in the money, sell for profit. And if there's still room for that stock to run to your target area, you could also buy a further out strike, So there's multiple ways to play it. But myself and the people in the room, very rare we go outside of the trigger or the target area unless it's something like Amazon or Tesla or, a big stock where you can go further out and still make money because the premiums are moving nice. But, the important thing to remember is check that the premiums are moving and they've got liquidity via volume. So you can sell and buy without any problems and the spreads are tight and the premium is moving in your favour. That they're the main important things to look for.
All right. I have one of those questions that I think people would want to know, but are maybe embarrassed to ask. So don't judge me for asking, but how do you determine your price targets?
By the patterns, if we got it's all via the setup. So if we got a downtrend break on the daily, obviously, when they go, like I said, they tend to go within a daily candle or two. So wherever you were drawing your downtrend lines from, the top of that downtrend line is going to be a target area. Or if you're playing, a double bottom, whichever pattern is presenting itself or setup, you can get your levels from the daily or the weekly target or the 4-hour target, depending on what play it is. If you're scalping, an hourly time frame, because your target areas are going to be based off which time frame you're playing, which is something people, also forget when they trade in options. So whichever time frame you see in the setup or the play on, that's going to be where your target area is, if that makes sense. So if it's a daily chart, obviously it's pointless looking at a weekly or a monthly looking for a target area there because your setup is going to be via the daily. If it's an hourly chart, it's going to be on the hourly. So it's very important to have the time frame that the setup is presenting itself on for you to get your target areas. So it's based off the patterns and the candles you're working with, yeah.
So which time frame do you mostly play off of?
So we pick our plays from the weekly and the daily. I do take I look at all time frames. I check the overall trend of the stock. Obviously we don't be looking at calls on the stock if it's been selling off for the past week or two, unless it's hitting, like I said, some sort of support area where it could potentially reverse. So I look at the bigger time frames just to check the overall trend of the stock, and then I mainly build my list via the weekly, the daily, and the 4-hour chart. And then obviously, when the market's open, then I'm personally looking at the 5, the 15, the 30-minute, and the hourly, and the 4-hour. All we're doing then is waiting for these setups to present itself for our trigger areas to go to get in on the plays. Because we've already got the hard work done on the weekends. We've already got these plays ready. It's just waiting for the opportunity to take these plays then.
Fantastic. That sounds so calm.
Yes, I think that definitely the simplicity it does create that sense of calmness, and that's important, I think, for when you're trading,
Yeah, and again, what Curly said, trading is 90% mental anyway. The panic and not being calm is going to come from either lack of preparation or panicking of how much size you got on a trade or how much you could potentially lose. So I mean, once you master yourself in the market and how you're handling your trades, it does become something that you can relax from, because and there's benefits to that alone. When you're relaxed in a trade and you're not worrying and you're not panicking and you've accepted the possible outcome of the trade going wrong, because you will take losses, no matter how good and how many variables in your favour on a play. Sometimes they just won't work due to a market environment. So once you accept the fact that it doesn't matter how good a trade looks, it's possible that that's not going to work. And if it doesn't work, I'm going to be okay because I haven't got, a lot of exposure that's going to damage my account. It does become I wouldn't say relaxing, because trading is not a relaxing thing, but it does take the pressure off. And when you're not pressured when you're trading, you're more focused. And that's when you can afford to watch a play out, the setup play out, and you can keep control of yourself, because there's a lot of people out there that's not making money purely because they're driven on emotions when they're inside a trade. And that's that is one of the reasons.
Yep. I started trading with some people this week on voice, and that's not something I do. I like to be very like quiet and calm, and I'll listen sometimes to people on voice, but I don't usually get on voice. But anyway, this week, I have been on voice, and I'll get in a trade and I'm talking through the trade, and they said, like, I can hear your emotion as you're talking through this trade, which I didn't know. Like, it was real eye-opening for me, because you can certainly convince yourself that you're okay, but they were like, you're not calm. So anyway, do you guys do voice?
Absolutely. I mean, the people that's in the room at the moment, they all got different jobs, different time zones and things. So some of them would rather the text in the room. We do both, but there are people who got other jobs who like to see obviously what we doing in the room typed on, because they may not be able to join voice or see the screen. So
Totally.
We do both basically, but there's always text that plays in the room regardless whether we're on screen or whether we're on voice. What we are thinking and what we are looking at and taking, or the trades we are in, is always documented in the room, so everyone can see whether you're joined via the Discord just to read, or whether you're on voice and screen with us. So whatever people need, it's a very personalized service, because everyone's at different stages in their trading journey. So we try and cater it for everyone, which is it's proven to work so far, and hopefully ongoing.
Sorry, I was gonna say the texting is nice because you can, Chris is really good with aiding into managing the trade as well. So it's not just like we can get in a trade and it's there literally guiding you through the trade and reminding you about risk management and whatnot through on active trade. I don't know how he does it because while he's on the trade as well, but I appreciate that sometimes he's seeing things that I didn't notice initially, for example, or I might be saying we're coming close to a resistance line, and it just brings some awareness of where I'm at on the trade and whatnot. So that becomes really helpful.
How many people are in the room?
So at the moment in the mentorship program, we have 9. Obviously, it'd be nice to have a lot of people in there, but at the same time, we've kept it small in the past because I can't delegate my time around. There's only 24 hours in a day, so I can't split that between hundreds of people. So in the past, I've only taken so many at a time. So in the actual mentorship section, there's about 9, but there's a lot happening outside of Discord as well. I do one-on-ones. There's people who I trade with who are not part of the Discord, if that makes sense, because via the site we offer one-on-ones as well. So some people may just want the psychology side of things, or they're struggling with the mental aspect. Some might want the technical help and so forth. So there are options available. I try and cater to people's needs wherever they need. It's not going to be one size fits all for everyone. There might be some people who might just need assistance in something, but they haven't got time to be in a Discord room and sit watching a Discord all day or trade. There's other people like Curly done before she joined the room officially. She was just getting the email sent to her every week, and she was doing her own thing around her working hours, and she was just trading off the list. So there's there's many ways to do it. Everyone got different commitments in a day, and we just try and cater to everyone's needs, and we will add or take away to cater to people's needs, because we do generally want to help traders out there and help each other, because we got a good team in the room. They're all incredible traders, and the group we got in now, they've come into themselves and they got their own trading styles. It's just great to see. So yeah, we are looking to grow the room now and take more people on for the mentorship section and everything, and hopefully grow going forward.
Okay, so Curly, what's the main thing that has changed about your trading since you've been trading with Chris?
Wow, That's a lot. Well, the first thing that comes to mind is definitely the risk management side. And that's something that I'm still working on, but not loading up on 20 or 10 contracts on a on a big moving stock at a time to start. That's a huge difference. I have reduced my size considerably. Not just that, I downsized my account. I went from at some point I was trying to, before I met him, I was trying to manage a 25K account, and I decided, after I've been working with him in risk management and all that, I said, even recently, I have taken money off of the account just to prevent me from blowing it up.
Yeah, totally.
And to protect it, because when you're in this learning process, realizing that this is a long term thing, that this is a marathon, and this is still me learning. And even if I still feel that I'm in the beginning stages of trading, um and I keep learning every day, so reducing my size, being able to pro- notice the contrast. When I am in a lower size, I am much more calm mentally. I'm much more confident managing the trade. I allow the trade to pan out, to actually be able to um, give it time to develop, versus when I am in a higher size, I'm not able to do that, right? And therefore
Absolutely.
I lose money because of it. Like, if I'm like in 10 contracts, I'm gonna panic if there's a pullback on that trade. I'm gonna panic, and I'm gonna get out of the trade at a loss quicker than when I have a lower size. So that's the number one thing that I remember he had me do, was lowering my size. And the problem that I've been encountering is, um I can create consistency, and then I can have all these green days, and then I'm like, oh man, I got this. Let me increase a little bit my size, and then
Yeah.
everything goes wrong.
Oh, yeah. Oh, yeah.
I create all this progress, and then everything goes back, and it's because I realize I'm mentally not. It's different when you
Yeah.
increase your size. There's something different in your mental process automatically of the batch, and that works against me. So I really have to increase slowly, right? And trying to then practice. I definitely need to get a grasp of practicing being consistent for a while with the same size, and when I'm ready to size up, to do it slowly, right? At one contract, not at 10. You know, that type of thing. So what else? I've been journaling. So
Uh-huh.
that was the other thing that he had me do at the very beginning, was journaling, keeping track of my trades. I wasn't doing that. And of course, I work, I have a day job, and things can get very busy. So sometimes, journaling, I try to do it in a daily basis, but sometimes I can't. And so I try to kind of like wrap it up at the end of the week, and still make sure that I go back and look through my trades, right? But I do notice that the times that my journaling has fell off, right, in the past, I tend to kind of like repeat the same mistakes, versus when I'm journaling on a daily, I tend to keep a better consistency with my trades, is what I notice. So definitely journaling seems to be a pretty important aspect of this, and I will recommend that, because it keeps you accountable, and it keeps you aware of what's happening, what's working for you, what's not working, that type of thing.
Uh-huh. I
And
absolutely agree with the journaling.
yeah,
Absolutely.
are
Yeah.
you doing it?
I Funny enough, I was cleaning up yesterday and found my handwritten journal from a year ago.
Mm-hmm.
And it's same thing as you were saying. I had a $25,000 account, and I just was under so much stress trying to keep it up. And I was also playing with like thousands of dollars I had no risk management. So I'd make $500 a day and then lose $2,000 the next day. And I was just ill. So anyway, I wanted to say that. But just this week, actually, so I was journaling, and then I got frustrated with myself and stopped journaling, and then my trading got worse. So this week I started a Discord for my trades, and then invited a couple of people to look over my trades every day, so that I can force myself to stop doing things like over trading and or revenge trading or taking a big loss and then going down in flames. All of things that I have flirted with many times. So anyway, yes, I now have a journal that's a Discord, and I like it because my handwritten journal was really just for my emotions, but I can post my charts, which I like. So
That's wonderful. And I think that also helps with accountability as well, with just, keeping grounded. I think that for me, the third aspect that's been really helpful is just having a supportive group, and having, with having Chris as a mentor, I can go through, okay, if I'm having a jam, I remember those days. I don't remember, do you remember, Chris, when I would like go on D and I'm like, I'm having a problem. I'm stuck. This is not going my way, and I'm not able to sell it. Like I will get stuck. Like I knew that because I wasn't using stops at all, hard stops, and and so when it was time for me to cut a trade, I was having a mental challenge to cut it, especially if I had gone in with a higher size, right?
Mm-hmm.
So I will have to get on the phone to just get me to trade. So it's like, oh my goodness, what are you doing? Cut the trade already.
And the thing about the journaling as well, which I told Curly, which is important for everyone to know. Some people one journal their good trades because they've had a good day. I don't need to journal this trade or anything, but you will essentially learn more from your losses, no matter how bad the trade was. If you jot it down, I mean, back in the day, I was like you, Blaine. It was all pen and paper. I was journaling pen and paper. I'd print the chart out, and then once the market closed, I'd go back over it, and I could see after the things played out, my mistakes. So I learned my biggest lessons from my losses, which was number one. And number two, if I had a good trade, it was like, okay, this is a setup that seems to be working for me more than other setups. So I will keep an eye out for this setup, and every time this setup presents itself, I'll just play this until I, start getting consistent. Or you'll see that you're more profitable playing certain tickers, or you do better with other tickers. And it was like, for me, my journaling told me at the time when I started options at SPX, trading that, it used to kill me. So I took that out of the equation. I left SPX alone. There was other tickers that I done better with there, that higher success rate. So I stuck to them ones, and that's how I started building my watch list. Was the most successful my tickers was the ones I was playing from my journal, and the most setups I was successful with. I narrowed it down because I just wanted every possibility to give me high probability trades via my journal. Because if I never wrote those things down and printed those charts out, marking up my entries and exits, and I was journaling things like why I entered the trade, the market environment, what was the news, anything surrounding that ticker or that sector, I'd write it down, any bit of information I could get. So next time that situation arose, that ticker, I'd look back at my journal and think, oh hold on, this ticker did this before. It's got the same environment. The sector is doing good, this, that, and the other. And then it was just like a blueprint of my previous. So it's then rinse and repeat. And then you got more confidence going in the trade the next time around because you know where you're doing well and you know where you're doing not so well. So you can eliminate the things you're not doing well from your trading and do more of what you're doing well. It's like I know Curly eliminated a few tickers from her
Yeah.
her trading recently because she found
Yeah.
out from journaling that she wasn't so successful trading others than she was trading a few others. So she eliminated the ones she would have no success with and focused more on the ones she was having success with. So, you know, personally, I can't emphasize the importance of journaling throughout and it doesn't matter where you are in your journey, whether you're a seasoned trader or a beginner. I guarantee if you're not journaling and you start, it will make you a better trader in the long run.
I absolutely agree, and I can see that happening so much for me. It's such an important thing to be honest with yourself about what you're doing as well. I think, because it used to be that I would have a bad day and just turn off the computer and be like, I don't ever want to think about that again. Yeah.
Oh yeah, I've been there.
Yeah. So knowing that I have to
Face it, right?
yeah, face it and justify why I took the trade has been, it keeps me from just doing stupid things.
Absolutely. And,
Oh yeah.
Yeah.
we all do it. We've all been through it. And I mean, it all boils down to yourself. You know, trading is you versus you. So you need to know what you're doing right. You need to know what you're doing wrong. You need to know where your strengths are. You need to know where your weaknesses are. And you ain't gonna identify those without journaling, because you're not gonna remember every trade you took, why you took it, why you was on watch, you know, and the way you played out. I would literally, like I said, journal every bit of information, how I was feeling, which was another thing I recognized in my trading, was when I weren't mentally sharp, whether it was a lack of sleep or down to a lack of exercise or poor diet, whatever. If I weren't mentally with it, I would trade worse. So there was little adjustments, you know, in and around my life that, you know, made a big impact on my trading as well as the actual trades itself. But again, I wouldn't know none of this without journaling my trades, which is, it was just a powerful tool to use, in my opinion. So yeah, I'd recommend it.
Absolutely.
Yeah.
And you know what, Blaine, I was, you know, I read your post and I'm like, oh my gosh, I was like, send you so much positive vibes, because I've been there and I'm still, you know, I have not, I'm still working towards, you know, perfectioning, getting better in certain areas. And like I've mentioned before, one of my biggest weaknesses is being able to establish some consistency with the same size and then switching it up, right? Because I'm thinking, okay, I got this, right? And the moment that I switch it up, you know, I've taken all the work of the whole month, of my gains of the whole month, into that one trade, you know, completely red. You know what I mean? And it's the worst feeling to do that. And just because I switched the system that I had in place that was working. And the one thing I've noticed with the journaling is, if I had that one red cut at my max loss, it will have meant nothing in my overall month.
Yeah.
Getting a grasp of that, you know, that's the part that I think that we as newer traders especially need to understand, that the better you are with cutting your red on time, the better off you are with keeping your gains. You know, I know Chris says this a lot. I like that, when not cutting you say something about not cutting your future profits. Yeah, by cutting your...
Yeah, I mean, that's another thing with options as well. You know, it doesn't mathematically make sense as a day trader to let a contract go 50% in the red, because that trade then needs to go 100% on that contract for you to just get back even. Right. So mathematically, it doesn't make sense to hold on to a loser, especially with options. So what I just say to the group is, every time you hold a loser and let it bleed past your risk when you know you should be cutting it, you're robbing yourself of future profit, because your next trade that you make a gain on is just making up for the loss that it took previously. Because the end story is going to be what defines a successful trader from a failure is risk management. You know, I was reading something years ago about 70% of lottery winners to go broke and 80% of day traders quit within 12 months. So when you look at the stats out there, that 90% of profits come from 20% of your trades, that tells me two things. Number one, it's all about risk and money management. And number two, you're going to lose more times than you gain in the market, because and that's a fact. So when people accept they're going to take losses, you know, that's going to help them alone. So how do we handle that? You've got to make sure that when these losses come, because they will, it doesn't matter how good of a trader you are, how good a setup looks, they are going to come forever. However long you trade, you're going to keep taking losses. So how do you tackle that? And the only way to tackle that is risk management. You've got to make sure that you ain't taking hits after hits that's going to bleed your account or blow your account up. It needs to be skewered.
Totally.
So your account can take multiple hits. If you were looking at that statistic, and it's true, that 90% of your profits are coming from 20% of your trades, you've got to be prepared to take, 8 losses out of 10 and still survive with an account. So you should be taking paper cuts on those 8, and the other 2 should be giving you enough profit to give your losses back and make you profitable overall. Because it's risk management that's going to grow your account, not making money. Anyone can make money in the market. Going back to the lottery winning statistics, 70% of them go broke. So it's all about risk management, it's all about money management, and it's about making sure that you're keeping more than you're giving back to the market. And that seems to be what I found helping people is, probably 90% of the trouble people have. It's just too much risk, they're losing too much cash, and if they would just alter those 2 little things, it's like last year. Mm-hmm. We had one member of our room. He was making great gains. When I met him, he was making thousands a day, but he was also losing thousands. So the first thing we done was cut back his size, because people don't realize if you're making $100 a day, I bet Curly Girl is sick of hearing this. I say it all the time, but if you make $100 a day consistently, the only difference to making $1,000 a day or $10,000 a day is up in your size. And you up your size when you get consistent, and you've got the size account to add more contracts or to add more shares. So if you can don't get frustrated by making a small amount every day, because if you can do that consistently, once your account grows, you can add another contract or more shares and you can make $1,000 a day. As long as you're consistent, that's the main. So that guy came to me, and that was the first thing we done, was drop his size down. And I said to him at the beginning, I said, you're going to go from losses to break even to profitability. I said, and you should never go back to losses. And then last year he had 7 green months in a row, and he ended the year, I think it was, his account grew 11,000%, Curly? Was it around about 11,000%?
Around there.
Around there, yeah.
Wow.
Yeah.
And that was basically, to emphasize my point, that was down to risk and position management. It was nothing to do, he weren't doing nothing that he didn't do before. All he was doing was managing his risk better and his position sizing better. And then he reaped the rewards of that last year, and his account ended 11,000% growth, which is crazy, which is awesome.
And he doesn't even trade every day, because he also have a day job. He does not trade it daily. Yeah. So that was pretty impressive to see too. Yeah.
Yeah, he traded 9 months out of the year, and he took a red month, and I think it was September. So he didn't trade till after Christmas after, and he still had a 11,000% growth. And the important thing to take from that is that's all just from risk management. So there's the power of managing your risk there and earning more than you're giving back to the market.
Mm-hmm.
I like that a lot. I've been working on that so much recently, and it's been, it's just been nice mentally to not lose as much. Like, you know what I mean? Like, not having to look at over $1,000 loss is it's just good for the mentality, I think, because if it is a few $100s, that's something that I could make up on one trade. It isn't quite as detrimental and I would rather not have those, but it's not as detrimental of like, whoa, that's going to take a lot of wins. So
that goes back to the emotion side of things, Blaine, and that's why I'm convinced most traders don't see it past 12 months of trading, because they either blow their account up, lose all their money, or they get frustrated, and they're getting frustrated because of the emotion side of thing. And just to emphasize my point, I know I'm repeating myself, but I don't understand why new traders want to take large positions in stocks anyway, because your trading journey is going to start with learning, just like any other skill. just like any other profession. You've got to learn the trade. You've got to get familiar with it. You've got to know what you're doing, and it takes practice and screen time. So the beauty of playing smaller size, the risk you put out there should be risk enough that if you lose it, you're not bothered. If you take another trade the day after and you lose the same amount per your risk, it doesn't bother you. So when your account is set up where you can take that hit over and over, you've got no emotion. You don't care about the loss because it's not significant to your account. So while all that's going on, it gives you time to focus, time to reflect on your trading and your journal, build a better outlook on your trading. You will not get frustrated. You will not give up. And it's inevitable that the longer you do it, the better you're going to get. So you're basically in training when you start trading. So to risk a big chunk of money while you're training in trading is just crazy to me anyway, which is a mistake I've done also, by the way. You know, don't think I haven't done anything I'm saying here, because I've done it all. Anything anyone, I can guarantee anyone hearing this, anything they've done in the market, I've done 10 times worse, 10 times bigger. Believe me, I've done every mistake you've made, and so have everyone else. We all got the same emotions. We all go through the same things when we trading, and that's the beauty of having a trading community, you know, to bounce off each other. So don't anyone think that, you know, they can't do it, or, you know, they're unable to do it, because you've got just as much information and chance as everyone else. The trick is you've got to survive in this game and be around long enough for that turning point in your game where you are getting consistent and profitable. So I think it's important to survive, and the only way to survive is not to blow your account and play small while you're practicing.
And I think the small wins get really underestimated too, especially when, you know, when people are seeing big gains over on Twitter, for example, right? You can really underestimate small gains. If you think of yourself like, you know, last week you posted something about making it a point to just making $50 a day. And I saw that post, and, you know, that's my I have reduced my goal a little while back to about 100. And when I read your post, I said to myself, you know what? I like that. Let me just it just took off pressure.
Yeah.
I'm going to try this with Lane. I'm going to let's try to get $50 out of today and make it a day, you know, call it a day.
Yeah.
And I went to the market with that mentality versus thinking, oh, I need putting a pressure of making X amount of money. I went more, not even 50, but, you know, like I was just thinking, if I make 50, you know, it's okay. I can just leave. Market has been, you know, obviously there's so much going in the world right now. And so, you know, this creates a lot of uncertainty and volatility in the market. Let me just go with that mentality. And the result of it was
probably one of the best weeks of that
I ended up waiting more, right? I was more patient. So I was waiting more before entering a trade. And what I did, I ended up making more than what my usual goal was, you know, but I think it came down to not being focused. I was just more focused on the process of and having a good entry with my actual setup and following, you know, like my rules versus being focused on I have to make this amount of money, right?
Yep.
So it was a different experience, and it resulted very, very well, you know.
I love it. I love that. I really have struggled. I've been very open about my main issue is greed, which I did not know about myself until I started trading. But it was never really a problem for me to be green on the day. Like, I know how to trade, right? Like being green on the day was never really the problem. It was over trading. So I would get like a really nice profit and then I would just give it back. And it just kept happening. So I'm focused now, really. I didn't have a monetary goal for the day. That, you know, it'd just be like, let's just see how much I can make. Like, especially if I was like trading well, I would just want more and more and more. And knowing when to stop, like in an ideal world, I would take one trade a day, hit my goal and be done. Like if I could get to that level of self-control, that, oh God, it would be fantastic.
Oh, yeah. Oh, and you will be making so much money as well.
Yes.
So have you
Yeah.
done the exercise of sitting down and on paper and figuring out how much you will keep in a month should you do what you usually do in one trade?
No.
You should do that exercise. I encourage you to.
I agree.
Okay.
Yes.
I agree. The daily goal thing is so important for those reasons, feeding the money back to the market. Because when people, like I said, I've done it also. Don't think I'm excluded from anything I'm saying. So when people do they sit down, they try and take money from the market, and it was like Curly one day. She'd already made about 2 or 3 times her daily goal, and she wanted to trade more. And I said to her, which I have with other people, what amount of money is it going to take for you to close the computer down? And it's like,
Right.
What do you mean? It's like, well, how much money is it going to take for you to shut the computer off for the day because you've made your daily goal and you're still ready for more? Now, I understand if the setups are there and you want to risk partial profit, that's not what we're talking about here. What we're talking about is it's in a consistent number over and over repeatedly. So it doesn't matter. And this is what we do in the room. It doesn't matter what the market environment is. Everyone hits their goal. And, 9 times out of 10, we done within 2 hours of trading. So, which allows people then who got day jobs to shut it down. Don't put the pressure on yourself because like the longer you do this through the day, I guarantee the more trades you take, the odds are not in your favor anyway. You're going to end up giving profit back to the market. If you want to use partial profit, if you see a good setup and it's a clean setup and it's an high probability one, there's nothing wrong with that. But the question that got me out of overtrading years ago was, I'm going to get quicker to my goal if I hit a consistent number every day. And that's what I do, and that's what got me consistent. There's people that come in my room, they come in with I see small accounts double within 2 weeks just from doing that. They hit their goal, they let us know in the room, we say, okay, shut it down, see you tomorrow. And it's the consistency that's going to do it. Because if you hang around long enough, you are going to drip feed money back to the market. And the whole point of this is, there's a lot of variables in the market that's against us retail traders anyway. So you want to hit you a little corner of the market, get you a piece of the pie, and then get out of there. Chuck the lasso on the cash, tow it from there, and shut it down for the day. And the quicker and better you do, you will. I just find you get your goal quicker doing that.
Yeah,
absolutely.
I always like to use the idea of like, you can't control the market, obviously, but you can make the market work for you by like just finding like that exact thing. It just executing your same exact setup over and over again. You can have like control in an uncontrollable situation.
Exactly.
Which I always like.
Yeah, I mean, we never going to beat the market. The market got way too much money, way too intelligence for someone like me to take on the market and win. So when I started trading, it was, okay, I got these variables against me, this variable against me. How do I work out a trading plan to eliminate these from my trading style? It's like, the Greeks, theta. How do I eliminate that from my trading style so it doesn't affect me? And other things to do with the market. So you've got all these variables in the market which you can't control, but the one thing you can control and should control is how you are reacting to the market. So I can't control what the market does and which way it's going to move, but what I can control is how long I'm in a trade, how much of a loss I take on a trade, or how much profit I take on a trade. So it then becomes navigating yourself and your account within the madness of the market. Don't try and dictate where the market is going, just focus on navigating your own account through the market. And then once you let go of, because some you'd be surprised the people that get in a trade and, oh yeah, they should get you because of this and it should do this because of that. And it's like, no, the market's going to do what the heck it wants. So your job, your job is to protect your account and get as much money out of your plays as you can. Don't try and think the market is going to dance to your tune because that's never going to happen. So yeah, I agree with you, Blaine. It's all about taking you a piece of the market from your game plan and, just not trying to work the market.
Yep, for sure. Well, Guys, we're sort of at the end of our time, but I could talk to you guys forever. And I actually am feeling like a lot better about going into this week. I really enjoyed talking to you guys.
Same here,
Very
Blaine.
calm.
It's been awesome.
Thank you so much. Thank you. Likewise.
This was just lovely. Do you, is there anything, Chris, would you tell us again, the name of your room and how people can get in touch with you if they want to?
Yeah, so I'm very active on Twitter. My Twitter handle is BreakoutPlays1. There's also a link there for my website. And obviously, if people want to join up, then there's access through the link to get into the Discord room and everything. So yeah, Twitter is basically the main place where you get hold of me at BreakoutPlays1.
Fantastic. And Curly, how can people get in touch with you?
Well, my DMs are open, and that will be at Curlygal Invest. And I'm talking to people all the time. Actually, people reach out. I'm happy to support and join people in this journey as well. Right, we're like all in this together. But so happy to have connected with you as well. And you're not alone.
Thank you.
Definitely. And so, anytime.
Okay, well, I have just loved this, and let's keep going. I'd love to talk to you guys more.
Absolutely.
All right. Thank you.
Thank you, Blaine.
Thank you. Take care.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.